To share my screen. Here we go. Thank you. There we go. Great. Hi everyone. Sorry, I'm just setting up my I am just setting up my screen. Make sure you can hear me and see me. For those of you, hello. For those of you who don't know who I am, my name is Adam. I will be your analyst and trader for the next 30 minutes, give or take. So let us kick off. Good morning. Okay. Well, yeah, it's 10 a.m. in the UK now. Um, let's get rid of this. Sorry. What are you doing, man? Give me a second here. Sorry, guys. Give me a second. I've got another application that is complaining. There we go. All right. Go back to sharing. That was fun. Okay, so here's the thing, ladies and gentlemen. The biggest currency, the biggest cog in the entire market is the US dollar. Okay, it's the biggest thing, right? So it's like 60% of the currency market. It's the world's reserve currency. The US is the strongest economy or the biggest economy in the world, with China catching up. In fact, it's possible that within the next year, China might take over. We'll see. Um, so the first thing we want to do is two things we always want to do, obviously, in the week ahead. So if we're doing our analysis for the week ahead, there are two things we need to do. Okay, we always need to get a sense of what's going on with the US dollar. Remember that all stocks are priced in US dollars. Even the FTSE in the UK, all the stock exchanges are priced in US dollars. All commodities are priced in US dollars. So the US dollar is used in like 90% of the world's transactions. So two things we need to do always at the start of each week, all right, is we need to have a look at what US news is coming out. Now, we're living in a very weird time. So for those of you who are new, in the 15 years I've been trading, this is brand new stuff. Like this, the chaos coming out of the US administration is insane. And so we're in uncharted territory. But I think that's a good thing, because if you're learning to trade now, when this kind of craziness goes away, you're going to find it so much easier. You won't believe how easy it is to trade normally. So the first thing we want to do is get a sense of what is the news coming out over the coming week. Okay, so this is next week's news. Now, the US government is shut down. So while that government is shut down, it is possible that government data may not be released. Excuse me. So last week, Friday, was NFP. It was a massive, should normally be the biggest day of the month in terms of just market noise, and they didn't release any data for non-farm payroll. So this is what we've got coming out this coming week, but we may not get any of this data if the department is closed, which could mean one of two things, right? That the market continues to tick along, or possibly that it doesn't do anything. It just sits and just goes into a bit of a coma while it's waiting to hear back from the US. I think there's a possibility that some of the markets are going to keep going. I think gold and silver, and I think some of the indices are going to keep going. And the reason I say that is because I think they're in a bubble, and I think they're disconnected from the economy. They're disconnected from that. All right, but this is the big stuff coming out, so we normally want to pay attention to it. Why do I feel like this has changed? Okay, so they've moved non-farm from last Friday, which is normally the first Friday of each month. They've moved it to the second Friday. Okay, so basically they're going to keep pushing it to the next Friday until the government opens again. I don't think there's any rush to open the government, so I think it could be closed for 6 weeks. It could be closed for a month. I think you need to be prepared for that. Okay, so we just need, in the back of your mind, you need to understand that there's a part of that. The markets might continue to tick over. That being said, Okay, so the first thing we want to do of the two things is check the news, and to know what big stuff is coming out. So there could be some stuff here for Kiwi. All right, they're anticipating a change, a cut. So if they do a cut, that will weaken the currency. So the Kiwi dollar is already quite weak. This is normally what happens. It will normally weaken the currency, which means that Kiwi pairs might end up going lower. So we're going to pay attention to that in a moment. Okay, cool. The second thing we want to do is get a sense of what's going on with the US dollar. Now, we don't have the dollar index here. So what we're going to do is we're going to run through all the dollar pairs. We're looking to see if there's any kind of clues as to what's happening. We're going to start with euro dollar. And we're going to go to the weekly. And the reason we're going to go to the weekly is because if we can get a sense of what the next weekly candle is likely to do, that makes a big difference to us. But if you zoom in here, one of the things you'll notice is that by and large, euro dollar is stuck sort of in that range. Let's change the color. This is terrible. There, let's try that. Okay, it's not really doing a lot. Okay, it's largely range bound. And this is a weekly chart, guys. So this is a failed breakout. And this goes all the way back. Let's just see what that is. That goes all the way back to July. Okay, so July. So what does that actually mean? It means until we break out of this range, we're likely to just stay stuck in it. Okay, so euro dollar, there's not much happening. That gives us a big clue as to what the dollar is like at the moment. Let's have a look at GBP. Believe it or not, it's also still stuck in a bit of a range. Just got to draw the range a little bit differently. So let's just do it like that. Okay. Fail breakout there, fail breakout there, but by and large, still stuck within a range. Okay, so what does this mean in terms of trading opportunities? It means if you're trying to use a trend-based system such as the Wave Rider, it's going to fail. It's going to have more losing trades now because the Wave Rider is the best. It's the best indicator that I've ever seen for a trend-based system. It's very good, but you'll do very well with the Wave Rider on gold and silver and possibly a couple of others, and then the indices right now until the trends come back to the markets. Okay, so just need you to understand that if the markets aren't doing anything, and the weekly is a very good way of giving you a sense of that. Now, when we look at Aussie dollar, it's slightly different. It's got a couple of ranges, slightly different from the rest. It had a little bit of a range kind of like here. There's a little bit of a range. There's also a little bit of a range here. It's sliding to the upside. And actually, it's produced a bullish candle here. So this could be setting up, possibly setting up for a move higher. It's break, it's pull back, moving averages on a bit of a bullish formation. It could actually be looking to move higher. So Aussie dollar has a little bit of strength in it. The Kiwi dollar, on the other hand, is in a downtrend. And it's coming back into a potential level of support and resistance. Support, resistance, support, support, resistance. So if we get the rate cuts, it would make sense if we end up going lower this coming week. So Kiwi dollar might be worthwhile trading, maybe. Dollar yen is very much stuck in a range. Okay, so we should stay away from dollar yen completely. There's nothing happening here. So euro dollar, GBP dollar, dollar yen, nothing. Dollar Swissy is also shockingly bad. Okay, it's just stuck in this range. And this is very similar, not identical, but very similar to what the dollar itself is doing. There's really not a huge lot going on. Okay, so it also means that your targets, if the market's not moving much, it'll go up and come back, go down and come back. So the problem is if you want to trade this stuff, you need to make sure you're taking money off the table. You can't have very far targets because the market's not traveling. It's not going anywhere. Okay, we can only make money if the market is moving. Dollar CAD, interesting to me. It is coming into a level, a little bit of a level where it is now, but it is moving up. It is weakening. So in other words, the Canadian dollar is weakening. All right, so we're going to have a look at some of the cross pairs that look really good. Dollar Sing is also stuck in a range. Okay, guys. So the reason all of these are stuck in a range is because of the dollar. Does that make sense? Yes or no, guys? Yes or no? Does that make sense? So this is a normal routine for me, running through the majors to see if there's any commonalities between them. Now, one of the things we noticed was that most of the charts are in a range. There's a couple of exceptions. Aussie dollars creeping up a bit, Kiwi dollars going down a bit, dollar CAD is going up a bit. So those are the ones that we want to pay attention to. Why? Because the CAD is moving, the Kiwi is moving, the Aussie is moving. Those are the charts that may be offering some opportunities. So let me give an example. Now what we'll do is we'll go through all the Aussie charts. We'll go through Pound Aussie, Euro Aussie, Aussie CAD, Aussies. We'll go through all the Aussie pairs. Let's start with the Aussie pairs here. Aussie was looking a little bit bullish. So Aussie Kiwi, we can see is trending up. It's a bit overextended. We've got a strong rejection candle here. So we might find that Aussie Kiwi comes down a little bit this week. Okay, but it's very bullish. Aussie Swissy is flat. Now the reason for that, believe it or not, is actually the Swissy. The Swissy itself is quite strong. How do I know that? I know that, and I'll show you that in a moment. But that's why Aussie Swissy is going sideways. Aussie CAD is pushing up, and it's beautiful. It's pulled back, it's pushing up. It's sitting close to a bit of a key level here, but Aussie CAD could be one on your watch list. I really like the look of Aussie CAD. If it can get past this level of resistance where it is now, even if there's a pullback, there could be some buying opportunities. Overall, this looks really nice and bullish, and at some point I expect it to break out. But it is at a level of resistance, so be very careful. Let's have a look at Pound Aussie. Okay, Pound Aussie, not really showing a lot of trending here, so we'll leave that. If the two currency pairs are roughly as strong or as weak as each other, we don't really see much. Euro Aussie, let's have a look. Euro Aussie, no clear trend. Okay, no clear trend. We look on the weekly, you can see it's just sideways. And then finally we've got Aussie Sing. Let's have a look at that. That's creeping up. So Aussie Sing has broken up through resistance. It's come back and tested it. Looks bullish, very similar to Aussie CAD. So Aussie Sing and Aussie CAD looking pretty interesting to me. And we looked at all the Aussie pairs. Aussie Yen is the last one. So Aussie Yen is also slowly creeping up. It's also at a level of resistance, and it may find support. So I wouldn't be surprised if this moved up a little bit. But overall, again, the last 3 weeks, 4 weeks, sideways. So if you're finding a lot of trades are not hitting their targets, that's a big thing. If they're just not moving, you're not imagining it. Okay, we're living in a period. We're living in a period now where the markets don't know what to do. So it's slowing a lot of things down. Aiden is saying, no, you didn't understand what I meant there. Okay, if you tell me a little bit more, I'll expand on it. But so I looked at all the dollar pairs first to see if there was any commonalities there, mainly in the currency markets. Now we've run through the Aussie pairs because they looked a little bit bullish, and Aussie Yen looks nice and decent. Aussie CAD looks really good. So the other ones were Kiwi and CAD. They were the other pairs here. So now we'll look at the Kiwi pairs, see if any of those look nice and weak. So for example, Kiwi Swissy trending down. Why? Well, because the Swissy is a bit strong and the Kiwi is a bit weak. So what that does is it means that there is generally a trend going lower. The only problem with this is all the spikiness that you see here, all these wicks above and below, they actually make the market very messy and choppy. So it looks smoother on a higher time frame, looks really nice over here, but when you get down to the lower time frame, it looks very choppy. Excuse me. But that being said, this could actually continue down. We've got a nice downtrend here. We pull back into the moving averages. We could just continue down from here. So very much this week could be a potential Kiwi Swissy trade to the downside. Okay, Eden, thanks for clarifying that. Let me just go back and do this so that it makes sense. If we look at all the other pairs, for example, they are largely completely sideways. They haven't actually changed their location over the last, going back to July, even further. But when we get to Aussie dollar, it actually has. It has been slowly but surely sliding upwards. And so it's not great, but it's not going sideways. Okay, it's actually starting to move up. In addition to that, it has broken through a level of resistance. It's come back. It's produced a bullish candle here. Normally in those types of situations, the next most likely thing is to see a push away from that level, which means that this overall slide to the upside should continue. That's what I mean. Then when we go and have a look at some of the Aussie pairs, but especially Aussie CAD, you can see there's a very strong uptrend here, which we don't necessarily have everywhere else. EuroCAD also looks good, and that's because of the CAD. Okay, EuroCAD is pushing to the upside, so that's got a trend. So your wave riders on EuroCAD and Aussie CAD will perform better. Let's have a look if Pound CAD is the same. So Pound CAD is still going to the upside, but also it's very choppy. So it goes up, then down, then up, then down, then up. Okay, and it's also at a key level. Okay, so it's forming. Generally speaking, it's just testing that level, but it is sliding to the upside. Okay. So that's a lot of the CAD pairs. CAD Swissy as well is also trending lower. So Wave Rider on CAD Swissy again hitting low. Why? Because the CAD itself is weak and the Swissy is strong. So if we have a look at a lot of the Swissy pairs, I'm going to show you this on the monthly because it's more obvious on the monthly. CAD Swissy hitting lower, Kiwi Swissy hitting lower, Pound Swissy heading down. This is a nice level of support that it keeps testing, but it's generally trending down. Dollar Swissy generally trending down. Let's see if Euro Swissy is the same as well. Euro Swissy also trending down. So on all the Swissy pairs, largely there is a long-term move to the downside that Swissy continues to get stronger. And so it's much more obvious on the monthly, but they are generally like here, it's just garbage. You can't trade this on the weekly. You can't trade that on the weekly. You go to the daily, you can't trade it. It's useless. But I wanted to show you from an analysis perspective that there is this long-term slide that Swissy continues to strengthen. And so you can work out, because all the charts are doing exactly the same thing or very similar, you can determine what is happening. What is the common element? Okay. And in fact, they are the only charts that are sliding down. All the other charts are generally going sideways or up, but it's all the Swissy pairs are generally sliding down consistently. So we've looked at the Kiwi. Let's have a look at the rest of the Kiwi pairs as well, because we can see if we go to the weekly here, Aussie Kiwi, for example, is trending mostly up. That's the Aussie strengthening against the Kiwi. When we look at Kiwi Swissy, definitely trending down because the Kiwi's weak, Swissy's strong. Kiwi CAD, okay, is a mess. Why? Because the Kiwi's weak and the Canadian dollar's weak. So they're canceling each other out. They're not really going anywhere. And then we have Kiwi Yen, which is also potentially trending lower. So if we look at this on a weekly, again, also very kind of a range. Again, sort of a bit of a range over here, sort of stuck largely here. So just be aware, it is sliding down a little bit here, but overall, it's not traveling a lot. It's not moving the way that it does here or the way it does there. And I'm just saying, in case you want an explanation as to why a lot of those stuff, have a look at the weekly or the monthly and see if it is actually moving, if it has moved since April. And it's the tariffs. Okay, they've sort of broken the markets a bit. Because they've also reduced trade and the currency markets are money being moved from one country to another, because normally, at least as part of trade, it slowed that down. Okay, so if it's reduced trade, that means money's not being transferred to pay for stuff. Okay. So that gives us a sense of some of the Kiwi pairs that could potentially be offering something. Euro Kiwi sliding up, that looks good. Very similar, by the way, to Euro CAD. Okay, very similar. So Euro CAD, Euro Kiwi, great for wave riders. Should be better for wave riders. Euro Aussie not going anywhere. So the reason I do this on the weekly is because all I have to do is, if I get a sense of the weekly, the next candle is a good indication what the next week is going to be like. And that's really it. You get so much from the weekly chart. Here, for example, the next weekly candle is going to be somewhere here. It's not going to do anything. So I know that Euro Aussie is not worth trading. If we look at Euro GBP, I get a sense of there's a key level we need to pay attention to. Generally speaking, I can see it's pushing up, but we don't know if it's going to reject the level or if it's going to break through. I think so. So the Swissy strength, I think, is likely. I think we're seeing a massive move in gold and silver, and we're seeing not so much of a move in the dollar, obviously, in general, and we're seeing a move to the Swissy, which is just stability. Yeah, it makes a lot of sense. Yeah. I think so. So the question here is, with the US government shutdown, can we look towards more dollar weakness? Now, yes, in the longer term. I know that the current administration wants a weaker dollar. They want a weaker dollar. Well, they say they want a weaker dollar because they think that it'll make buying American products more attractive. They want to compete with China. Like, it's not a very well thought out, it's definitely not a well executed plan, but that's the basic idea. So yeah, weaker dollar works for them, but that also has an impact on their bonds. Okay, so then there's a bit of a problem for their bonds. So if the dollar loses its value, bonds become a bit of a problem. So there could very well be, I don't know this, I can't prove it at all. There could very well be a bond buying program with the Fed and so that's where we're seeing a lot of that where right now the dollar hasn't weakened any further. But I also can't really expect to see the dollar strengthening very much. There just isn't any reason for it to do that. If anything, as the US becomes more unstable, other countries are likely to start getting rid of their dollars because holding dollars is going to be a bit of a problem. So I would say for now that it's going to be sideways or weaken, but don't expect it to weaken just continually like unabated. It's first of all, everybody is expecting that, and the markets never do what everybody thinks they should do. So when everybody is expecting the dollar to weaken, don't be surprised if it doesn't. But yes, because it's such a big question for 2025. I would expect the dollar in general to weaken as long as the current administration is in power and they keep doing the things they're doing. I can't see how the dollar is going to strengthen in the long run. I could see short term strengthens, but like pullbacks like this, but I would expect sideways or weakening. Okay, guys. Yeah, that would be my logic. Um, yeah, so let's have a look as well. Let's go through the rest of these. So those are the majority of the pairs. We could also look at all the Euro pairs, for example. So we could go look at Euro pairs generally trending up, Euro Aussie sideways within a sort of generally like sideways, then up, then sideways. Euro Kiwi trending up. Euro Swissy is sideways. Euro CAD is trending up. So Euro is not really doing anything right now. It's going up and sideways, and it's not really doing so much. The Euro itself doesn't really have a strong direction. Excuse me, what about the pound pairs, GBP pairs? Pound Aussie is actually going down a little bit, but here's the trap. Here's the trap. When you look at the monthly, it's actually in an uptrend. So if anything, Pound Aussie should start to strengthen in this area. Or if it did, it wouldn't be a surprise, is what I mean. So that's actually a long-term uptrend, even though here it looks like a downtrend. Here it looks like a bit of a downtrend. Just be aware of the bigger picture context. It's actually an uptrend and it's in a sweet spot here where it can turn around. So don't let that fool you. Pound Kiwi is trending up. Okay, so that looks good. Pound Swissy is coming down. It's a descending triangle. So it might be a breakout at some point on the Swissy pairs. Pound CAD is going up. So again, the pound is kind of doesn't have a fixed direction across the board. So we've looked at all the Aussie pairs. We looked at all the Kiwi pairs. We've looked at the CAD pairs. CAD is largely weak. Okay, so CAD yen and the yen itself is also weakening. So we're not really seeing a huge amount. So if you're not seeing a strong trend on these, then I would stay away from trading them unless unless it's a range-based strategy. But then you have to have very tight targets, like one-to-one targets, nothing bigger than one-to-one, unless you know that it's within the range. And just things like Euro Swissy, just stay away from them. It's just garbage. You can't trade that. So that's all of the currency pairs. Let's have a look at gold. Gold is on fire. It's in a bubble, but I don't really expect it to stop trending at any time. It may go back into a consolidation, something like this at some point. But again, I think as long as the world is so on fire everywhere, I think gold is just going to keep climbing. I want to show you, though, a 100-year chart so that you can see how much gold has moved over time. So this is just interesting. Going back to 1930s to 1970s, gold stayed around about $35 to $40, hardly moved. And then it started a massive move up like this, okay, up to 1980. And then it did nothing, bottomed out at 2001, and then it started a move up, and then it bottomed down a bit and a move up. So that just shows you kind of where we are within the bigger picture of gold. So it can keep going. There's no reason. It'll just go until it stops, okay? And so for now, for me, I think any pullbacks would be potential buying opportunities. The 4-hour is potentially something to look at for consolidation breakouts, pullbacks, any of that kind of stuff for now. I also think that, so I think some of the best opportunities are going to be with gold and silver. And of course, yes, you could go, this part here was a 4-month, where was it? Here was a almost 5-month consolidation. Didn't do anything. So we can have those again, but yeah, this is going almost like parabolic. It's in a bubble for sure. Let's see. Let's see what I can get for silver. I've actually got a 100-year chart for that. Let's have a look. 100-year chart. That's interesting. Obviously didn't have a lot of data there. Wow. But yeah, that was a big spike. 79. Very interesting. Okay, I didn't know that. $35. I know I was here when this happened. When I say I didn't know that, obviously I wasn't trading back then. That was the previous high, it was almost $50, and we're heading back up to that now. So we're heading back up to 50, I think, is the target for this. There we go. That's silver from 1980 onwards. Okay, silver is not really the same as gold. I think currently, so it's not, it can be correlated, but don't assume it's always correlated. Silver is still catching up to its all-time highs, still catching up to that. Whereas gold has been at all-time highs for, a while, a year or more. So this is coming up to these levels here. I just want to mark those. And you can see where it is now. And it's also gone parabolic. So yes, could we end up having a correction like this at some point? Yes, we could. It will happen, but for now, we are overextended. We are very, very overextended from the moving averages. And at some point, we'll need to have a bit of a pullback or a consolidation. But I think silver is going to attempt to hit 50 now. I think it's really going to try and do that. And then it might have a bit of a reaction off that. So again, shorter term, I think that pullbacks here could represent buying opportunities. There's no sign of divergence here. It all looks really good. The trend looks really good as well. It's obviously in a bubble. It's running hot. And that bubble could last for another year or two. So pullbacks, again, as I said, doesn't look like it. Doesn't look like a cup and handle at this point. I mean, unless you count that as the handle, but no. Well, we'll see. Let's see what happens when it gets past this point. That could be it. That could actually be it. You get a bit of a pullback and then you form the handle and go. Okay, so guys, so far, best stuff, gold and silver. Let's have a look at crude oil. Crude oil's in a long-term downtrend. So you might not think that looking at the monthly is relevant, but it really, really is. You see stuff on the monthly that's very obvious that isn't obvious on other time frames. And here we have a very steady decline to the downside. Okay, it's a little bit messy as well. I think, listen, I don't know this, and I'd love to hear somebody like Gordon or Paul's take on this, but I think that we don't really see crude oils worth speculating on now. I don't think traders and even, big institutional traders are already speculating on it because I don't think we see it in our future the same way. Obviously, it's still being used in some areas, but I think most of us have agreed that it's on its way out, whether it takes 10 years or 20 years. And I think most of us are on board with it. So it's generally pushing down, but it's very messy. And the reason it's messy is because I think that a lot of speculators have left. And so when speculators aren't engaged in the market, it just reduces the volume on it. And so what you've got here is just a general, this might just literally just be normal trade stuff happening. And so it's very choppy and it's sliding down. We've got, 250, 20, and 10 in a bearish formation. There's definitely downward pressure, but it's not a great chart to trade, just in case. So I keep hoping that it's going to break through a key level and then start trending like crazy, which could happen. But also just wanted to explain why it's not doing anything really. It'll move down, then it ranges, then it goes sideways, then it shoots up, then sideways, then drops down, then sideways, then up a bit, then drops down. This behavior is not normal market behavior. It's like people have just walked away from this. And so not really loving it, not really seeing a lot of value in trading this. But yeah, I could be wrong. You guys could maybe you've got a strategy for something like this. Okay, let's go through the indices and wrap up, guys. So markets are very bullish at the moment, especially from a weekly basis. If I haven't shown you this is the most important thing I want you to keep in your mind. Actually, I want to do a poll. I'd love to do a poll. I'm just going to ask you guys a question. How many of you think that the global markets should go up or should go down now? Just tell me, up or down. Just give me some feedback in here. Which of you think the market should be going down and which of you think the market should be going up now? Okay, bit of a mix. That's okay. Okay, cool. So, let me just show you something. This is known as a V-shaped recovery. Market drops, market recovers, and it's followed by a bull run. Okay, it's kind of a pattern that's mostly unique to the indices or to stocks. This is almost identical, and the subsequent behavior so far is also very similar. So the indices in the stock market are right now, we go through periods throughout history where the middle class or middle income versus upper income or upper like 1%ers kind of thing, they have a different ownership ratio of the stock market. And in 1929, before that market crash and the subsequent tariffs, the Smoot-Hawley tariffs that came in that caused the global depression or contributed to a global depression, back then the wealthy owned the majority of the stock market. And then in the 60s and 70s, it was much more redistributed. But now we've gone back to that. We've gone back to a thing where the 1% owns a bigger chunk of it. And they're getting tax cuts. Right now, historically around the world, most of these places they're getting tax cuts. And the corporations, companies are getting tax cuts. So what are they doing with all that surplus cash? Because effectively, investing in the markets is a luxury activity. It's money that you don't need that you can put into the market. You don't need it to pay your bills. So they have a surplus of cash. So they're putting it into the market. So the majority of what you're seeing happening here is literally just what you see as a consequence of rate cuts, which tend to boost the markets combined with tax cuts for corporations and wealthy individuals. You're seeing effectively just all of them putting their money into the market, and this is not connected to the economy. That doesn't mean that it can't ultimately be affected by the economy. If these tariffs continue and America continues to lose brand favorability, people don't want to buy America and they don't want to do stuff, eventually it's going to start to impact the company's bottom lines enough that they can't like print their way out of it and they can't tax cut their way out of it. Eventually it's going to start to impact the earnings. And eventually that will then spook investors who will start to want to take their money out before the market does have a correction, which is a cause and effect thing, and then eventually we'll have that correction. So where I'm going with this is that if you think the market should be going down, you're absolutely right. It's in a bubble. It's completely disconnected. The reason we know this is because everything in the whole world is burning now. The markets are just going up. They're completely detached from what's happening in the world. The question really is, how long will that be for? And I just want to make a case that it's possible. And I'd love to hear feedback from Paul and Gordon and the guys that it could be something similar to this. This was almost about a year and a half. So let's actually just see what this is. Let's say from the bottom here to the top part, like before it kind of crashed. Okay, so what is that? 22nd of March to almost January 2022. So, 18 months, year and a half, a little bit more than that, year and a half. So we could still have another year or more of this. During that time, maybe the companies continue to do well. They keep talking about how much profits they're making. They still get more tax cuts. Maybe they start printing money. Maybe they get more rate cuts. So there's things that could keep the market going for another 6 to 8 months or more before there's ultimately maybe a correction. So I'm just trying to make a case here for why the markets might continue to go up. Okay, they're not following reality right now anyway. So the question really is how much longer will they keep going for? And it's not really a good idea to short the markets. You never, ever, ever short the indices. You don't do that because they are the strongest and they get juiced. So all the wealthiest people with all the most influence have the ability to keep these markets going when they really shouldn't. So you never really short the markets. What you do want to do is you want to trade with them as long as you can. And then if they start ultimately cracking, then fine. But you really don't want to short these markets because historically they always go up. Doesn't matter how far you go, they always go up, which means shorting them is a very, very dangerous, bad idea. My point is, the markets currently, yes, I am still expecting at some point we should have weekly pullbacks like this. We should still have those. And so consolidations or pullbacks, in theory, are still on the table, of course. And I think we should consider the idea that this can keep going throughout 2026, and then we'll see what happens. But cautiously. But at some point, we will have these pullbacks. And the problem is that every time there's a correction on the weekly, people will think it's the market crashing. People who are expecting the market to crash will think that a correction like this or something is the market actually falling apart. So we've got a couple of things happening here. We've got a little bit of wicks forming here. So I do think we're probably going to be in for a bit of a consolidation. And maybe that's because of the government shutdown. Markets might go sideways for a bit. I haven't seen any real pullbacks as possible, especially when they pull back and you get nice buy setups like this. They would be seen as buying opportunities. So we look at the Dow, and again, we go to the weekly here. Overall, we're still looking nice and bullish. the monthly is not too far away from the moving averages, but at some point we're going to need a bit of a correction. But the markets are still predominantly bullish. Excuse me. Although I do anticipate the possibility of just sideways or some pullbacks. The S&P showing a bit of exhaustion there, so we could see a bit of a sideways or pullback this week. The Nasdaq going up as well. So this is interesting. A big move and a pullback, and a big move and a pullback, and goes up and is starting to pull back already. So there definitely is some form of resistance now starting to take place. But again, this means the market could come down here and then build and then break out. Okay, so it kind of makes sense we might see a bit of a consolidation this week. The FTSE, non-US ones are amazing. I love this because it never used to be the case. It was always that the US markets led and everyone else followed. But we're seeing some such strong breakouts outside of the US. And so there's opportunities, guys, for you to have a look at these things. Even the DAX is back up at these highs. I'm interested to see if there's a breakout. It's had a beautiful consolidation. It's had a big run and a correction. Now it's having a nice consolidation. So I think we could be on the verge of a breakout and another move up. The Nikkei is doing incredibly well as well at the moment. Okay, that was a bit deceptive here because it looked like it was starting to break. It broke the lows there, and then it just took up and closed above the highs. So a bit of a wasn't a trick. It was just that the buyers are clearly involved. And then HK, I love HK because this one is just continuing to tick up. And when you look at its history, it's been going down for a while. So the other thing I want you to keep in mind, please, is this was the weakest of all the indices around the world for the most part. And it has now started to turn bullish, right? It's working its way up. It's got lots of upside potential. It's going to go up to these highs. And if you zoom out, there's lots of history there. This one is late to the party, but it is nevertheless turning bullish now. So if the weakest markets have turned bullish now, that actually tells you a lot. That tells you that the markets really, really are bullish. And then we've got the ASX. This is the Australian one as well. So this is also looking very nice and bullish. So again, I would wave rider the hell out of these things for sure. And I would also be looking at non-US ones because they all seem to be having their best time ever. And so they are looking particularly strong. But yes, the markets predominantly are bullish and gold and silver continue to climb. And then when it comes to the currency pairs, you're going to have to be a little bit more picky. Keep an eye on those. At some point, it would be nice to see that dollar just kick off and commit to something like weakening or just start trending again. But also I would expect it to not really do anything until, something changes, and we'll see. So there we go, guys. Any questions before we wrap up? Any questions? Did you find this useful? Is this helpful? Roberto, you're welcome. Little thumbs up coming across the screen. Cool. Okay. You want to be focusing on the markers that move, right? Because the markers that aren't going anywhere are just a waste of time. And also it's obviously not just about making money, it's about not losing money. And so the annoying thing is when you have a nice, beautiful, profitable trade and then you take another trade that doesn't do anything and then you give back the money. So if you can, guys, just stay away from the charts that just aren't going anywhere for now. Focus on the ones that are trending. You should have more winning trades in those markets and fewer losing trades. And just forget about the rest for now. Excellent. All right. Well, I'm going to wish you a wonderful week. As I said, we live in very weird times with the US at the moment. But overall, some of the markets seem to just be moving on regardless. Okay, don't expect the markets to be rational. Follow the technicals. If you ever have to choose, best bit of advice I could ever give you is if you ever have to choose between what you think the market should be doing and what it is doing, you have to go with the chart. You have to. The chart's always right. Because remember this, these are actual orders going through into the markets. All right, so all the people around the world are chewing on the same news and they're making a decision. All right, and they're pulling the trigger, buying or selling. And so when you see this, these are the actual orders going through. So you know what other people have decided to do, and you don't always have to try and decipher the news yourself. Just look and see what the big money is doing. And it actually kind of makes sense. It's big money right now is putting everything into corporate stuff because that's the way of the world right now. And gold and silver makes sense because that's definitely some form of safety. And at some point, yeah, they will have a proper correction. But we could be a way away from that. Okay, cool, guys. Sorry, my nose is itchy. Thank you very much. Listen, I want to wish you a fantastic week. I'm going to let you go. And I'm going to exit this. But yeah, have a great time.